Hey, everyone! With BlockSonic, you get the top Bitcoin news of the day in a practical narrated format, so you never miss an important market move. With BlockSonic, you don't need to search for information, we find it for you. Crypto analytics firm Chainalysis says impersonation. AI crypto scams stole $17.0 billion last year. Scams and fraud against individuals are increasing, and if the trend continues, they could soon surpass crypto stolen via cyber attacks, Chainalysis said. By Olivier Acuna. As much as $17.0 billion in crypto was lost to scams and frauds in 2025, crypto analytics firm Chainalysis said in its latest report. Criminals leaned into impersonation tactics and artificial intelligence to industrialize the way they hunt victims. The 2026 Crypto Crime Report, published January 13th, said, impersonation, crypto exchange imposters, and AI-generated scams against individuals are gradually overtaking losses to cyber attacks as the leading methods malicious actors use to steal funds. In one example, a man in the UK lost nearly $2.5 million to a Bitcoin scam in 2025 that involved what police called a disturbing new trend where scammers exploit fear and panic, crafting sophisticated social engineering schemes that can trick even diligent holders, North Wales police told the BBC Toronto. Between 2020 and the end of 2023, nearly 100,000 people in the UK fell victim to investment scams, totaling £2.60 billion, approximately $3.5 million, or about £13 million every week, the North Wales Cyber Unit reported in April 2020. These figures refer only to reported scams, so the true figure is likely to be considerably higher. Those stories are no longer edge cases, according to Chainalysis. Chainalysis said impersonation scams alone posted 1,014% year-over-year growth, with the average payment size rising sharply as criminals shifted away from spray-and-pray cons toward fewer but more lucrative targets. The firm also found that AI-enabled scams were 4.5 times more profitable than traditional scams, as deepfakes and automated tools make fake support agents, government notices, and trusted insiders easier to manufacture at scale. The evolution matters because it reframes where the biggest crypto losses are coming from. While hacks remain a persistent threat, Chainalysis previously reported nearly $2.2 billion stolen in 2024. Scams increasingly rely on something harder to patch than a vulnerable smart contract: human trust. Lior Isaac, co-founder and chief operating officer at crypto exchange XBO, said the trend matches what he's seeing firsthand. Across the crypto industry, impersonation scams are increasing and becoming more sophisticated, he told CoinDesk, warning users to never share sensitive data, even if they believe they're speaking with legitimate support staff. Of course, never transfer your crypto to anyone, and if a message feels urgent or secretive, it's usually a red flag. Isaac said he has been impersonated multiple times. Scammers have impersonated me by name, using fake profiles to contact people in the industry and request money while pretending to represent XBO. These attacks rely on urgency and trust, not technology. Turns out, Chainalysis data suggests a distinction may be the point. Crypto crime is no longer just about breaches and exploits. It's increasingly about deception that looks real enough to bypass skepticism, even when wallets and exchanges do everything else right. Algorand Foundation returns to U.S. amid friendlier crypto regulation under Trump. The blockchain nonprofit is moving its base of operations back to the United States and has appointed a new board to oversee its next phase of growth. By Will Kenny, AI Boost. The Algorand Foundation said it will reestablish its headquarters in the United States, returning to Delaware from Singapore as part of a broader restructuring that includes the appointment of a new board of directors. The organization said in a press release Wednesday. The nonprofit, which supports development of the Algorand blockchain, said the move reflects a renewed emphasis on U.S. operations as it expands work on areas such as payments infrastructure, asset tokenization, and other blockchain-based financial services. Under U.S. President Donald Trump's administration, crypto policy has shifted markedly from the enforcement-heavy posture of previous years toward a more industry-oriented framework aimed at fostering blockchain innovation and market growth. Early executive actions, including a directive to develop a federal digital assets regulatory blueprint, signaled a departure from aggressive prosecutions and unclear oversight, replacing them with a push for regulatory clarity and legislative engagement. By reestablishing our presence in the U.S., Algorand is helping ensure U.S. leadership for the next generation of financial infrastructure, said Stacey Warden, CEO of the Algorand Foundation, in the release. The return to the U.S. and the appointment of a new board are intended to sharpen, rather than redirect, Algorand's strategy. The new board includes former policymakers alongside longtime crypto builders and technologists, and is designed to support a clearer set of priorities around financial empowerment and infrastructure. It includes Abra founder and CEO Bill Barhid as chair, former MoneyGram CEO Alex Holmes, former FinCEN acting director Michael Mosier, Jito Labs CLO Rebecca Rettig, and Algorand Foundation CEO Stacey Warden. The board is tasked with overseeing expanded U.S. operations while guiding initiatives focused on global payments, asset tokenization, and broader financial access. Algorand's blockchain is already used by projects focused on real-world financial use cases, including tokenized real estate, cross-border payments, and on-chain lending. The U.S. base is expected to support further growth in those areas. The foundation also said it plans to form an ecosystem advisory council to give developers, projects, and large network participants a formal role in shaping strategy. Algorand is a public, Layer 1 blockchain designed for financial applications such as payments, asset issuance, and identity, and is used by developers building consumer and institutional financial tools. The network originated from academic research at the Massachusetts Institute of Technology, MIT. If you believe in what we're doing and want to support BlockSonic's growth, just scan the QR code on the screen or copy the link in the video description. Every contribution makes a difference and helps us keep delivering quality, independent, and up-to-date content for you. Germany's second-largest lender, TU Bank secures retail crypto trading MiCA license. TU Bank will shortly roll out a crypto trading platform for cooperative banks to offer to clients. By Olivier Cunha. Germany's TU Bank revealed it received regulatory approval from BaFin on the European Union's markets in crypto assets MiCA framework, enabling it to offer mine crypto, a digital asset trading platform targeted at retail clients through the cooperative banking system. The announcement follows a broader trend in Germany, where traditional financial institutions are entering the crypto space under the MiCA regime. ICA Bank, another cooperative group player, debuted crypto trading and custodial services for institutions in early 2025. Its bank's rollout signals that crypto is moving from institutional experimentation to mainstream financial infrastructure. The license, granted in late December, marks a shift for the Frankfurt-based lender. While TU Bank partnered with Bohr Stuttgart Digital in 2024 to offer crypto services to institutional clients, the new platform paves the way for retail adoption via the Volksbanken and Raiffeisenbanken. Integrated into the VR banking app, Mine Crypto provides crypto wallets and access to trading Bitcoin BTC $96,905.98, Ether ETH 3000, $3,303.03, LTC 78.9, $6, and ADA $0.4233. The service is aimed at self-directed investors and is not part of the advisory services for retail customers. Jitsi Bank created Mine Crypto for the primary institutions of the Cooperative Financial Group, and it will be available to these institutions shortly. This will allow individual institutions to offer their retail customers the opportunity to trade cryptocurrencies, the bank said in a statement. To do so, cooperative banks, Volksbanken and Raiffeisenbanken, must now apply to BaFin for micro-notification for Mine Crypto, a wallet integrated into the VR banking app. Once they receive the notification and have implemented the service, their customers will be able to invest in cryptocurrencies entirely digitally. More than 71.0% of cooperative banks in Germany's Cooperative Banking Association are interested in offering crypto services to private customers, according to a September 25 study by Genova Band. Jitsi Bank did not immediately respond to a request by a CoinDesk for information. Bitcoin could rise to $100,000, analysts say. Crypto Daybook Americas. By Onkar Godbole. Crypto analysts are predicting a continued move higher in Bitcoin after the cryptocurrency jumped past $95,000, breaking through a level that previously marked strong selling pressure. Technically, BTC now has a clear path towards the $100 106K area, limited by the psychologically crucial round level from below and the 200-day MA from above. Alex Kopsikovic, chief market analyst at the FX Bureau, said in an email, using an acronym for moving average. Charts are painting a strong bullish picture with prices trading above $95,000, the highest since November 17, and well above the 50-day simple moving average, he said. Gains in precious metals, typically seen as havens at times of geopolitical unrest, are key to lifting Bitcoin higher, said Singapore-based QCP Capital. If metals keep catching a debasement bid, BTC as relative value may pull flows back into digital assets, it said. The firm explained that the Goldilocks macroeconomic scenario, not too hot, not too cold, is driving renewed risk-taking across markets. Goldilocks still holds. U.S. jobs look steady and inflation remains stable. Risk is back across the board from equities and precious metals to the dollar and crypto, QCP Capital said. Market flows are signaling bullish vibes too. On Deribit, the largest crypto options exchange, call options at $96,000 and $100,000. Strike saw the most action over the past 24 hours. These calls are a bet that BTC's price will climb, eventually reaching six figures. In a report shared with CoinDesk, Galaxy warned the Senate crypto bill could pave the way for the biggest financial surveillance expansion since the Patriot Act. This could potentially allow authorities to freeze DeFi front ends and transactions, boosting the appeal of privacy-preserving tokens such as Monero XMR, $712.55, and Zcash ZEC, $412.52. Bitcoin recently traded at $94,711, up 3.04% over 24 hours. Major altcoins such as Ether, $3,332.03, XRP $2.45, $6, Doge $0.1482, and ADA $0.4233 have risen by around 5.0%, while Solana Sol $144.72 and BNB $936.601 have lagged. Smaller tokens have chalked out bigger rallies, as evidenced by the 11.0% gain in the CoinDesk Metaverse Select Index, and the 8.0% rise in the Culture and Entertainment Select Index. The memecoin index gained over 6.0%. In traditional markets, silver hit another record high, topping $91.5 per ounce. Gold is taking a breather near the lifetime high of $4,634 registered this week. Stay alert. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin clears $94,500 as altcoins steal the spotlight. Crypto markets today. Crypto markets pushed higher on Wednesday after Bitcoin broke above a key resistance level, triggering heavy liquidations and paving the way for sharp gains across altcoins. By Oliver Knight, Omkar Godbole. MetaPlanet just 5.0% away from restarting share sales for Bitcoin buying. MetaPlanet shares approach the 637 yen trigger that reactivates the company's moving strike warrants and unlocks hundreds of millions for new Bitcoin purchases. By James Van Straten. MetaPlanet, 3,350, Asia's largest corporate holder of Bitcoin BTC $96,905.98, rose to within 5.0% of the price that triggers renewed share sales to fund further purchases of the largest cryptocurrency. Stock of the Tokyo-based company rose 15.0% on Wednesday to 605 yen, $3.8. Close to the 637 yen level that reactivates its so-called moving strike warrant NetSW program after a pause designed to protect shareholders during the 80.0% slide from its June all-time high. Selling shares at that point would have risked diluting shareholders' stakes rather than adding value, as the ratio of the company's enterprise value to its Bitcoin holdings, the multiple to net asset value, NAV, fell below. That's now climbed to 136, its highest level since October. The company currently holds 35,102 Bitcoin on its balance sheet, making it the fourth largest publicly traded corporate holder worldwide. The latest program has two tranches, the 23rd and 24th series of stock acquisition rights issued to Evo Fund in December 2025. Together, they represent up to 210 million potential new shares, split evenly between the two series. The 23rd series carries a lower limit exercise price of 637 yen. Once the stock's adjusted closing price reaches that level, Evo is permitted to exercise warrants and sell up to 105 million newly issued shares. The capital raise would most likely direct it into Bitcoin purchases. The 24th series has a floor of 707 yen. If that threshold is reached, another 105 million shares can be issued, unlocking more capital. With the share price now up 90.0% from December lows, MetaPlanet is nearing the point where issuance becomes accretive again. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Pakistan signs deal with WLFI-linked crypto business for cross-border payments. The agreement would explore integrating a dollar-backed stablecoin into Pakistan's regulated payment system as the country ramps up plans for digital currency and virtual asset rules. By Olivier Acuna. Pakistan announced on Wednesday that it signed a deal to explore cross-border stablecoin payments with a company linked to World Liberty Financial, the crypto business tied to the U.S. President Donald Trump's family, according to a Reuters report. Pakistan's Virtual Asset Regulatory Authority, PARA, said the agreement takes the form of a memorandum of understanding with SC Financial Technologies, a relatively obscure firm it described as an affiliated entity of World Liberty Financial. The memorandum sets the stage for technical cooperation on regulated stablecoin-based payment infrastructure. Pivara said the deal will support technical discussions around digital payment systems and new models for regulated cross-border settlement, signaling Pakistan's growing interest in stablecoins and blockchain-based infrastructure. According to Reuters, a person familiar with the deal said SC Financial Technologies will work alongside Pakistan's central bank to explore how WLFI-linked stablecoin could be incorporated into a compliant payments framework. The plan would allow the token to function alongside the country's own developing digital currency systems, potentially supporting international transfers and settlement flows. Our focus is to stay ahead of the curve by engaging with credible global players, understanding new financial models, and ensuring that innovation, where explored, is aligned with regulation, stability, and national interests. Pakistan Finance Minister Mohammad Aurangzeb said, stablecoins, digital assets usually pegged to the US dollar, have expanded rapidly in recent years as crypto markets matured and financial institutions increasingly tested tokenized payments. Under President Donald Trump, the US has moved forward with federal rules widely viewed as favorable to the sector, while regulators worldwide continue exploring how stablecoins might function inside mainstream payment systems. Ripple wins early money license nod in Luxembourg for Europe expansion. The payments firm says the CSF has issued a preliminary approval for an EMI license, a step toward offering regulated crypto and stablecoin payment services across the EU. By Sharia Malwa, fintech firm Ripple is expanding its regulatory footprint in Europe after receiving what it described as a preliminary authorization for an e-money license in Luxembourg, a step that could help it scale regulated digital asset payment services across the European Union. The blockchain-based payments firm said Luxembourg's financial regulator, the Commission de Surveillance du Secteur Financier, CSF, has issued an initial approval for an electronic money institution (MI) license. Ripple characterized the decision as a green light toward full authorization, subject to remaining conditions. If completed, the MI license would allow Ripple to provide regulated payment services involving stablecoins and other digital assets across the European Union via passporting, using Luxembourg as a base to serve other member states under harmonized rules. The Luxembourg progress follows regulatory approvals the company said it received in the UK last week for its local subsidiary, Ripple Markets UK, covering e-money and crypto asset activities. Ripple is also pursuing authorization under the U.S. markets in crypto assets, MiCA regime aiming to secure a crypto asset service provider CASP license in the coming months as it shifts operations toward MiCA-compliant offerings. The firm said the EU and UK approvals would add to its broader portfolio of regulatory permissions globally, including U.S. money transmitter licenses and authorizations in jurisdictions such as Singapore and Dubai, alongside additional approvals obtained through acquisition. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. U.S. Bitcoin buyers are now driving price rally, reversing late 2025 trend. Strength in Bitcoin-linked U.S. equities, led by Strategy, is reinforcing positive sentiment during U.S. trading hours. By James Van Straten. Bitcoin BTC 96,900 $905.98, is up nearly 10.0% so far in 2026 after briefly touching $96,000 on Tuesday. A move largely driven by strong performance during the North American hours. The cumulative return for Bitcoin during that time of the day is roughly 8.0% according to Velo data. Prices gained a modest 3.0% in European hours, while Asian hours dragged performance downward. This trend marks a sharp reversal from late 2025, when Bitcoin was down as much as 20.0% on a cumulative basis during the North American hours at the end of November, when Bitcoin bottomed near $80,000 during the fourth quarter. U.S. market opens frequently saw Bitcoin selling pressure, while spot Bitcoin ETFs faced near-daily outflows. Breaking the data down further by hour reinforces the positive shift in sentiment during the North American hours. Velo data shows that the strongest returns now occur shortly after the U.S. market opens, between 2 p.m. and 4 p.m. UTC. While zooming out over the past 6 months, this same window had previously been the weakest period for Bitcoin performance. U.S. trading hours do not necessarily equate to activity driven by U.S.-based investors, as the price performance during these hours reflect gains made across both U.S.-based and offshore exchanges such as Binance. As a result, strong returns during U.S. market hours can coexist with a negative Coinbase premium, suggesting that demand may be coming from global participants rather than domestic U.S. buyers. Supporting the improved U.S. session sentiment, Bitcoin-linked U.S. equities have also rebounded. Strategy: Aster, the largest publicly traded company holding Bitcoin, appears to have bottomed on December 31 at $151 per share, and is now up more than 12.0% in 2026. Trading around $178 per share. The stock found support just above its 200-week moving average, which stood near $145.0. The 200-week moving average represents the average closing price over the past 200 weeks and is widely viewed as a long-term trend indicator and potential support level during market downturns. Binance Wallet unlocks in-app leveraged crypto futures trading with Aster team up. Binance Wallet's new feature allows users to trade leveraged futures directly from their crypto wallets through an integration with decentralized exchange Aster. By Omkar Godbole, AI Boost. Binance Wallet unveiled a feature allowing users to trade leveraged crypto futures bets directly, while avoiding the risk of holding coins on a centralized exchange such as Binance itself, the industry's largest by volume traded. Following an agreement with Aster, the second-largest decentralized perpetuals platform, users are able to trade directly through the wallet while retaining complete control of their coins, Binance said Wednesday. The move reflects growing user demand for blending the speed of centralized finance, CeFi, with the control of decentralized finance, DeFi. Users want seamless trading without the risks of holding coins on exchanges, a danger highlighted by the collapse of former centralized perpetuals trading giant FTX in 2022. The move is a key step toward empowering our users with more sophisticated trading tools while preserving full asset control, reinforcing our commitment to providing a secure, trusted gateway to the decentralized world, said Winston Lee, global lead of Binance Wallet, in a statement shared with CoinDesk. Binance Wallet is a self-custody wallet designed to help users explore Web3, interact with DeFi, and manage digital assets confidently. While it's a component of the Binance ecosystem, it trails rivals such as Consensys's MetaMask and Binance-owned Trust Wallet in terms of user numbers. By enabling on-chain perpetuals trading, Binance Wallet could evolve into a full-featured app, potentially drawing users from the exchange's 200 million-plus user base into a Web3 experience. The integration with Aster is the first of its kind within the Binance ecosystem. There is no such integration on the centralized Binance exchange, which offers its own futures platform, a spokesperson said. The feature is available exclusively on the wallet's web interface for users on BNB Smart Chain and allows seamless trading of leveraged contracts without third-party connections using collateral such as BNB Chain's BNB token. Tether's SDT stablecoin, Bitcoin BTC $96,905.98, Ether EEE $3,356.71, and others. Aster also supports contracts tied to equities, including Apple, APL, and NVIDIA, as well as the Invesco QQQQ exchange-traded fund. The availability of diverse markets will help Binance Wallet users diversify their portfolios within the decentralized ecosystem, according to the press release. Aster has a 24-hour trading volume of $6.74 billion. Market leader Hyperliquid has $8.46 billion. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us. These simple actions really help the project grow and keep BlockSonic running at full speed every day. Spanish bank Bankinter joins BBVA and Tether with stake in crypto exchange Bitcoin. The investment strengthens Bitum's capital structure and supports its regulatory ambitions in Europe and Latin America. By Francisco Rodriguez. Spanish banking giant Bankinter has taken a minority stake in crypto exchange Bitcoin, joining a €30 million, $33.0 million, funding round involving Tether in August 25. The investment adds another traditional bank to Bitum's growing list of backers, which already includes major local financial institutions, including BBVA, Unicaja, and Bank. Bitum, headquartered in Madrid, is among the first firms registered under the U.S. New Markets in Crypto Assets (MiCA) regulation, allowing it to operate across the entire European bloc. The company has positioned itself as a business-to-business gateway for banks seeking compliant access to crypto markets. Bankinter said in a release that the deal is aimed at fostering technological and knowledge-based synergies, specifically in areas leveraging distributed ledger technology, DLT. While exact terms weren't disclosed, the agreement strengthens Bitum's capital structure and adds weight to its regulatory ambitions in Europe and Latin America. Over the past 18 months, Bitum has quietly embedded itself in traditional finance. It acts as a back-end crypto service provider for Turkey's Garanti BBVA and jointly launched a custody and trading platform with Bank, according to documents shared with CoinDesk. In a statement, Bitum CFO Pablo Casadio framed the Bankinter deal as a sign that banks are choosing collaboration over competition. This alliance confirms that the banking sector can leverage our deep industry know-how to enhance its offering. Instead of competing, we are integrating strengths, Casadio said. The firm's ties to traditional financial institutions go deeper, however. In July 2024, Spanish bank Unicaja, through its investment arm, Unicaja Ventures, acquired a stake of over 5.0% in the exchange and secured a seat on its board of directors. U.S. spot Bitcoin ETFs pull in $750.0 million in strongest day since October. Cooling inflation and post-year-end relancing helped draw institutional money back into spot Bitcoin funds. By Sharia Malwa. U.S. spot Bitcoin exchange-traded funds recorded their largest daily inflows in 3 months, on Tuesday, signaling a return of institutional demand as investors rotated back into risk assets following year-end portfolio rebalancing. Data from Sosa Value shows spot Bitcoin ETFs logged $753.7 million in net inflows, the strongest single-day total since October 7. Fidelity's FBTC led inflows with $351.0 million, followed by $159.0 million into Bitwise's BitB and $126.0 million into BlackRock's IBIT. What? The pickup in flows suggests institutional investors are re-entering the market after a subdued end to 2025, when tax-related selling and risk-off positioning weighed on allocations to crypto-linked products. Ether-linked funds also saw renewed demand. U.S. spot Ether ETFs posted a combined $130.0 million in net inflows across 5 products, mirroring the broader recovery in crypto markets. Improving macro signals helped underpin sentiment. The latest U.S. Consumer Price Index data showed inflation continuing to cool from prior highs, reinforcing expectations that the Federal Reserve could pivot toward interest rate cuts later this year, a backdrop that has historically supported risk assets. Crypto prices rose alongside the inflows. Bitcoin gained about 3.0% over the past 24 hours to trade near $94,600, while Ether climbed more than 6.0% to around $3,320. Outperforming as demand broadened beyond Bitcoin. Dogecoin jumps nearly 9.0% as buyers push price out of recent downtrend. The rally in meme coins like Dogecoin and Pepe reflects renewed speculative interest as broader crypto markets remain mixed. By Shaurya Malwa, Dogecoin rallied nearly 9.0% to around $0.14 as buyers forced a break out of a weeks-long downtrend, with heavy intraday volume and renewed speculative interest lifting the meme token, even as broader crypto markets remained mixed. Dogecoin's move comes amid a broader resurgence in meme coin trading at the start of the year, with traders rotating into high beta tokens as Bitcoin remains range-bound and liquidity conditions stay uneven after the holidays. Dogecoin and Pepe led the latest leg higher, rising roughly 11.0% and 17.0% respectively in a single session, while CoinGecko's GMCI meme index climbed to a market value of about $33.8 billion, with nearly $5.9 billion in 24-hour trading volume, a sign the rally is not confined to a single token. The speculative tone has also been reflected in exchange-traded products. According to Bloomberg ETF analyst Eric Balchunas, a leveraged Dogecoin ETF ranks among the best-performing ETFs to start the year, alongside a 2x semiconductor stock product, underscoring how traders are expressing risk appetite through aggressive momentum-driven vehicles. Market participants say meme coins tend to outperform in environments where Bitcoin trades sideways, macro catalysts are scarce, and traders seek fast-moving opportunities. The flip side is fragility. The same leverage and momentum that fuel sharp rallies can unwind quickly if sentiment shifts or Bitcoin breaks lower. Doge climbed from roughly $0.67 to $0.13940 over the 24-hour period, breaking above a descending trend line that had capped multiple rebound attempts through December. The move marked the first clear structural shift in weeks, with price reclaiming levels that previously acted as resistance. The breakout was reinforced by a sharp surge in intraday volume. A notable spike hit during the USR session, briefly pushing Doge to $0.14 before a pullback, indicating active two-way trade rather than a thin, low-liquidity move. Price held above the former resistance zone on subsequent tests, suggesting buyers were willing to defend higher levels. Doge also moved back above its 50-day moving average, a level many short-term traders watch for early signs of trend change. While longer-term indicators remain mixed, the shift removes a key technical headwind that had defined the recent downtrend. This move is less about fundamentals and more about positioning and momentum, not heart. Breaking out of the recent downtrend has shifted short-term bias in Doge's favor, but follow-through will matter. Holding above the $0.8, $0.14 area keeps the rebound intact and opens the door to a push toward higher resistance zones around $0.7. Failure to hold those levels, however, would suggest the rally is another momentum burst within a fragile market, a common pattern in meme coin trading when volumes thin or risk appetite fades. For now, Doge is acting like a temperature check on speculative appetite. Strong while traders are willing to lean into risk, but vulnerable if broader crypto sentiment turns defensive again. XRP zoomed 6.0% higher on surge in trading activity. While XRP's recent rally stands out in a mixed crypto market, it remains below longer-term resistance levels. By Sharia Mawa, XRP jumped to $2.17 after buyers finally pushed through the $2.14 resistance zone, with a sharp pickup in volume suggesting real demand rather than a thin, holiday-driven move. The move comes as XRP continues to attract attention early in 2026, following a stretch of steady institutional engagement. Spot XRP exchange-traded funds have maintained consistent inflows in recent weeks, while exchange balances remain near multi-year lows, a setup that can amplify price moves when demand increases. Market commentary has also turned more constructive. Several analysts have pointed to XRP's improving structure relative to Bitcoin after months of consolidation, while others caution that the token is still trading below longer-term resistance levels that capped rallies throughout 2025. The broader crypto market has been mixed, with Bitcoin and Ether struggling to extend gains. Against that backdrop, XRP's ability to attract focused buying has stood out, even as traders remain selective across large-cap tokens. XRP rallied from $2.05 to $2.17 over the 24-hour period, ending January 14th, breaking decisively above the $2.14 level that had capped multiple upside attempts. The breakout was accompanied by a surge in trading volume, with 167.9 million XRP changing hands at the peak, roughly 189.0% above the 24-hour average. Price action showed a clear bullish structure. XRP posted consecutive higher lows from $2.05 through $2.12 before accelerating into the breakout, signaling buyers were stepping in earlier on each pullback. The move also marked a clean break above a descending trend line that had limited upside momentum since late December. On the 60-minute chart, XRP printed a brief V-shaped pullback after touching $2.17, dipping to $2.16 before rebounding quickly on elevated volume. That behavior suggests demand remains active near the breakout zone rather than sellers immediately fading the move. This move looks more than a routine bounce, but it's not a clean trend confirmation yet. As long as XRP holds above the $2.142, $2.16 zone, the breakout remains intact and opens the door for a test of higher resistance near $2.26 and potentially the $2.4 area that capped rallies earlier this cycle. If price slips back below $2.14, the rally risks turning into another failed breakout, pulling XRP back into its prior consolidation range with support near $2.03. For now, the tape suggests buyers are in control, but follow-through above resistance will matter more than the size of the initial move. Bitcoin surges above $95,000 as Ether, Solana, Cardano jump 8.0% on investor optimism. Lower inflation eased pressure on bond yields and improved liquidity conditions, a setup that has historically favored crypto and other risk assets. By Sharia Mawa. Crypto markets ripped higher on Wednesday as easing U.S. inflation and renewed political uncertainty around the Federal Reserve reignited demand for scarce, non-sovereign assets. Bitcoin BTC, $96,905.98 jumped more than 4.0% over the past 24 hours, breaking above $95,000 for the first time in a week and pushing toward the upper end of its January range. Ether outperformed, climbing over 7.0% to around $3,330, while major tokens such as Solana Sol, Cardano's ADA, XRP $2.677, and BNB Chain's BNB moved as much as 9.0% higher. The move came as U.S. inflation data surprised to the downside, reinforcing expectations that the Federal Reserve will continue cutting rates this year. Lower inflation eased pressure on bond yields and improved liquidity conditions, a setup that has historically favored crypto and other risk assets. Political tension added fuel. Reports that the U.S. Justice Department had served grand jury subpoenas on the Federal Reserve earlier this week unsettled markets and weakened the dollar, boosting the appeal of assets viewed as insulated from central bank risk. Bitcoin is now approaching levels that previously triggered heavy selling, and derivatives data shows leverage is quickly rebuilding. It means the market could see increased volatility. The upside move came with significant wind-ups in futures markets. More than $688.0 million in crypto derivatives positions were liquidated over the past day, according to CoinGlass data, with short sellers accounting for roughly $603.0 million of the total. Nearly 122,000 traders were wiped out as prices accelerated higher, led by a $12.9 million ETHs liquidation on Binance. The liquidation skew highlights how aggressively traders had positioned for downside heading into the inflation print and how quickly that narrative unraveled. Traditional markets rallied, reinforcing the risk-on mood in the crypto market. Asian equities climbed to record highs, silver broke above $90 an ounce for the first time, and gold hovered just below all-time highs. These moves suggest investors are increasingly looking for exposure to assets that benefit from looser financial conditions and currency instability. Bitcoin prices hit two-month high, but U.S. demand lags. The Coinbase Premium Index remains negative, indicating a relatively weaker U.S. demand. By Omkar Godbole. Bitcoin's BTC $96,905.98 price hit two-month highs above $95,000 on Tuesday, but U.S. investors aren't buying as much as people overseas. A key measure called the Coinbase Premium shows this gap clearly. This metric compares Bitcoin prices on the NASDAQ-listed cryptocurrency exchange Coinbase with prices on offshore giant Binance. Right now, Bitcoin costs less on Coinbase than on Binance, the world's largest exchange by volume and open interest, even as prices rise overall. That means more Americans might be selling than buying. A negative premium suggests lower Bitcoin prices on Coinbase compared to the global average, indicating strong selling pressure and potential capital outflows from the U.S. market, Singapore-based crypto exchange FIMEX said in a blog post. Historically, U.S. demand has led major Bitcoin price rallies, driving the market higher. This trend strengthened after President Trump's re-election in November 2024, followed by positive regulatory moves under his administration. The chart shows the Coinbase Premium Indicator peaked in October along with Bitcoin's price and flipped negative in early November. Since then, it has largely remained negative, highlighting weak U.S. demand. U.S. investors may be holding back, waiting to see if the Clarity Act, a proposed law to clarify crypto rules, gets passed. The Senate has pushed back the crucial markup of the act to the last week of January to secure bipartisan support. Some analysts expect Bitcoin to hit a new high in case the act is signed into a law. Senators pitch more than 75 amendments for crypto bill, including on-yield DeFi sections. A list of amendments, some of them far afield, is circulating for the planned markup hearing of the Crypto Market Structure Bill by Jesse Hamilton, Nicholas Daybook. U.S. senators have filed over 75 amendments ahead of this week's landmark crypto market structure legislation hearing, according to a document detailing the provisions obtained by CoinDesk. These pitches for changes in the draft bill range from prohibiting stablecoin yields entirely to blocking public officials from profiting from crypto interests to modifying how digital asset mixers and tumblers are defined. And they're being offered by senators from both the Republican and Democrat parties. The Senate Banking Committee is holding a Thursday markup hearing, where lawmakers will debate amendments, vote on whether to adopt any of them, and ultimately vote on whether to advance the underlying bill. A similar hearing from the Senate Agriculture Committee was rescheduled to late January. The base text of the Banking Committee's bill was released close to midnight on Monday, and lawmakers and lobbyists have pored over the details since then. Some of these amendments appear to have bipartisan backing. Senators Tom Tillis and Angela Alsobrooks offered 3 together, 2 of which appear targeted at the stablecoin reward section of the bill. One amendment would remove the term solely in the base text, which currently reads, "A digital asset service provider may not pay any form of interest or yield, whether in cash, tokens, or other consideration, solely in connection with the holding of a payment stablecoin." Another amendment would modify reporting and add risk guidance requirements to yield. Multiple other proposed amendments similarly take aim at the stablecoin rewards section of the draft text, including a few that would eliminate yield entirely. In a typical congressional markup, most amendments tend to flame out. Many of them could also be dropped according to deals struck in the room. So the vast majority of this lengthy list is likely destined for the cutting room floor. What isn't clear is if lawmakers have come to a bipartisan compromise on issues Democrats had raised earlier in the negotiation process. Chief among these is an ethics issue Democrats have had with President Donald Trump and his family's ties to crypto. They formally laid out this concern in a document last fall. Though Senator Ruben Gallego was said to have led some of the negotiations on ethics provisions, none of his amendment descriptions suggest he's pushing one on that topic. However, Senator Chris Van Hollen proposed an amendment which called for an anti-corruption provision, along with another anti-touting requirement mandating disclosure of financial interests. A Democratic aide told CoinDesk on Tuesday evening that negotiations around ethics are still happening, but no deal or agreement had been reached yet. The aide described ethics as one of a couple sticking points in these talks. Senator Lisa Blunt Rochester, meanwhile, proposed an amendment addressing quorum requirements. Speaking to Democrats concerned that Trump has not nominated any Democrats to join what are meant under the law to be bipartisan commissions, helming the Securities and Exchange Commission and Commodity Futures Trading Commission. Both regulatory agencies are currently run solely by Republicans. According to the document, Democratic Senators Gallego, Alsobrooks, Blunt Rochester, Jack Reed, Andy Kim, Raphael Warnock, Catherine Cortez Masto, Elizabeth Warren, and Van Hollen offered amendments before Tuesday's deadline. On the Republican side, Tillis, Mike Rounds, Bill Hagerty, Pete Ricketts, Katie Britt, John Kennedy, Cynthia Lummis, Kevin Kramer, and Tim Scott filed provisions. Bitcoin climbs to 2-month high of $96,240 as altcoins surge and shorts get squeezed. Bitcoin climbed above $96,000 for the first time since November, triggering over $500.0 million in liquidations as altcoins outperformed and traders rushed to cover bearish bets. By Oliver Knight, Bitcoin briefly rose to a two-month high of $96,240 on Tuesday, while traders piled into the altcoins. More than $500.0 million worth of futures positions were liquidated over the past 4 hours as Bitcoin broke the $94,500, a key level that traders are watching. For the first time since November, Bitcoin attempted and failed to break this level 3 times before on January 5th, December 10, and December 3. Open interest for Bitcoin futures stands at $30.6 billion, having tumbled from a high of $31.5 billion over the course of the day. The drop-off in open interest indicates aggressive buying on spot markets, while on the derivative side, traders are covering shorts. Privacy CoinDash appeared to have sent a signal before Bitcoin's breakout, rising to its highest point since 2021 on significant volume, which may have inspired confidence among other trading pairs. The gains are now widespread, up $0.3602 is up by 18.5%, while TIA and Pengu are 14.0% higher over a 24-hour period, indicating renewed optimism from traders following a corrective altcoin phase. Bitcoin dominance has now also tumbled from a high of 59.3% on December 24 to 58.6% as several altcoins outperformed the world's largest cryptocurrency. The CoinDesk 80 Index, Seed 80, which tracks the price of a basket of 80 tokens excluding Bitcoin, is up by 8.0% day-to-date, while the CoinDesk 20, CD20, is lagging behind at 6.35%. While it appeared that Bitcoin lacked bullish catalysts in 2026, the market has seemingly shrugged off that negative sentiment, punishing those betting on the downside. One possible reason is that the October $19.0 billion liquidation, Cascade Mint Bitcoin, and the broader crypto market were heavily oversold, which created a situation where several assets were undervalued. But traders simply didn't have the appetite to buy after a grueling period. Instead of trading crypto, traders left the market and headed for precious metals like gold and silver, as well as AI stocks in the case of South Korea, a nation that historically has been a barometer for retail trading. The Crypto Fear and Greed Index regularly slumped to extreme fear levels in recent months, typically a good time to buy when sentiment is low and the general mood is bearish. In the short term, traders could expect Bitcoin to retest the $94,500 level as the new floor before heading up to $99,000, the next key level for traders to watch, as this has acted as support for the price between June and November that will now be resistance. However, a failure to hold the $94,500 could result in Bitcoin falling between $85,000 and $94,500.0. Senate Agriculture Committee reschedules its own crypto bill hearing to January 27th. The Senate Agriculture Committee said Tuesday its postponed crypto market structure bill would drop on January 21 and be debated 6 days later. By Nicholas Degan. The Senate Agriculture Committee plans to publish its crypto market structure bill on January 21 and hold a key hearing on the text on January 27. The committee announced Tuesday that its hearing, originally scheduled for January 15, but postponed on Monday, would kick off at 3:00 p.m. The markup hearing is a crucial step toward advancing legislation. Lawmakers will be able to debate amendments, vote whether or not to add them to the base text, and then vote on whether or not to advance the overall bill to the full Senate. The Senate Banking Committee is holding its own markup this Thursday for its version of the bill. A draft of the Banking Committee version was released near midnight Monday, though lawmakers are expected to offer amendments prior to the hearing. In a statement, Senator John Boozman, the committee chairman, said the revised schedule ensures transparency and allows for thorough review as the committee moves forward with legislation to provide clarity and certainty for crypto markets. I am grateful to Senator Cory Booker, who continues to be a great partner, as well as to our staff for their hard work and dedication to create new rules to protect consumers while also supporting American innovation, he said, referring to the lawmaker leading Democrats on negotiating on that committee. The Agriculture Committee has not released draft text since its initial discussion draft. Outstanding issues include ethics provisions referring to President Donald Trump and his family's ties to various crypto businesses, and quorum rules requiring regulators like the Securities and Exchange Commission and Commodity Futures Trading Commission to be helmed by bipartisan commissioners. At present, both agencies only have Republican commissioners. The Banking Committee text similarly does not include language around ethics or quorums, and the present version may not have bipartisan support as a result. Two individuals tracking the bill told CoinDesk. Strive tumbles 12.0% as reverse stock. Split stumps investors despite Semler acquisition. Upon completion, the combined firm would hold nearly 13,000 Bitcoin, surpassing the holdings of Tesla and Trump Media and Technology Group. By Christian Sandor. Strive's shareholders have approved the acquisition of Semler Scientific, SMLR, but investors were caught off guard by a 1-to-20 reverse stock split announced alongside the deal, sending shares of both companies lower. The all-stock transaction includes the transfer of Semler's 5,048 Bitcoin to Strive's balance sheet. After the merger, the combined company will hold nearly 12,798 Bitcoin, placing it ahead of Tesla and Trump Media and Technology Group, DJT and Bitcoin reserves, and ranking it 11th among corporate holders. That includes Strive's latest purchase of 123 Bitcoin for $11.3 million at an average price of $91,051.0. Strive said the reverse split is intended to align share price with institutional participation standards, according to a statement by Strive CEO Ben Workman. Strive stock was trading below $1 for much of the past 3 months. Strive's stock plummeted to as low as $0.9 following the announcement and traded 12.0% lower recently, while Semler shares fell nearly 10.0%. Matt Cole, CEO and chairman of Strive, defended the reverse split as being meaningless from a valuation standpoint, while it opens the door for several institutions to be able to buy the stock after. The merger and stock maneuver underscore the consolidation pressure in the digital asset treasury sector as investor enthusiasm has cratered along with stock prices in recent months. Many firms in the space now trade well below the net asset value of their crypto holdings, limiting their ability to raise capital to expand reserves. Mergers and asset roll-ups have emerged as one of the few remaining tools for scaling operations and gaining market visibility. Strive said it plans to monetize Semler's medical diagnostics business and retire roughly $120.0 million in outstanding debt tied to Semler, including a $100.0 million convertible note and a $20.0 million loan from Coinbase Coin. The company stated that it will maintain a lean corporate structure, focusing on BTC operations and yield generation. Thanks a lot for tuning in to BlockSonic today. We'll see you in the next live session with more news, analysis, and market alerts. Until then, keep your eyes on Bitcoin and keep listening to the sound of the blockchain. Hey, everyone! With BlockSonic, you get the top Bitcoin news of the day in a practical narrated format, so you never miss an important market move. With BlockSonic, you don't need to search for information, we find it for you. Crypto analytics firm Chainalysis says impersonation. AI crypto scams stole $17.0 billion last year. Scams and fraud against individuals are increasing, and if the trend continues, they could soon surpass crypto stolen via cyber attacks, Chainalysis said. By Olivier Acuna. As much as $17.0 billion in crypto was lost to scams and frauds in 2025, crypto analytics firm Chainalysis said in its latest report. Criminals leaned into impersonation tactics and artificial intelligence to industrialize the way they hunt victims, the 2026 Crypto Crime Report, published January 13th, said. Impersonation. Crypto exchange imposters and AI-generated scams against individuals are gradually overtaking losses to cyber